Traders, listen up. Sapien is setting up for a major move, and the chart right now is telling a very clear story. This next reaction could determine whether we continue the downtrend or finally break out. Let's dive in. As you can see, traders, we are back again on Sapien. And if you missed our previous analysis, you can check the link in the description. In that earlier breakdown, I explained that Sapien was moving strictly in a downtrend direction, forming a clean and consistent series of lower highs and lower lows. This is the classic fingerprint of a bearish market where sellers remain firmly in control and every attempt for a bullish push gets shut down around key levels. In that analysis, I pointed out a very important resistance level around the 0.18 zone. This level had been respected multiple times. Each time price tapped that point, it showed a strong rejection to the downside, confirming that sellers were defending the level with confidence. That was our key zone to watch. I mentioned that if price came back to that resistance level and gave us a bearish candlestick, we should look for a sell. But if the market failed to respect it and instead broke above it, then we would switch our bias, wait for the retest, and position for a buy. Now let's talk about what is happening currently. As you can see, traders, price did exactly what we expected. It returned to that resistance level, attempted to break through it, but failed. Instead of breaking out, the market produced another strong rejection, confirming that sellers are still present, still active, and still defending that area. But here's where it gets even more interesting. After rejecting from the previous resistance, the market has now formed a new resistance level slightly above it. This tells us two things. One, the market attempted to push higher but lacked enough bullish strength to break structure. Two, sellers stepped in even earlier than expected, creating a fresh rejection point and establishing a new key level. This newly formed resistance level has now become our primary zone to watch for the next trade setup. The market has already tested this level multiple times and each test resulted in rejection, which confirms it is valid, visible, and respected by both institutional and retail traders. So here is what we are patiently watching for. If price comes back to our new resistance level around 0.20 and forms a clean bearish candlestick, this becomes our confirmation to look for a sell from there to the downside. The downtrend structure will be intact, momentum will remain bearish, and the market will likely continue forming lower lows. But if the market does not respect this level and instead breaks above it, this is a very important signal. That would mean this resistance level has flipped into a support level. In that case, we do not rush. We wait for the retest, look for bullish confirmation, and then enter a buy from there to the upside. This approach keeps us disciplined, patient, and prepared for both outcomes without forcing trades. To summarize everything, Sapien is still in a downtrend direction, forming lower highs and lower lows. Our previous resistance level held strongly, and now the market has created a new resistance level above it. This level has already been respected multiple times and continues to act as the main zone buyers cannot break. If price comes back and respects the level, we sell. If price breaks the level and retests it as support, we buy. Do you think Sapien will respect this new resistance level again? Or are we finally about to see a breakout to the upside?